Thank you, Chairman and the Board, and greetings to shareholders present in this room and online. I'm speaking on the resolution at item 6, Transition Plan Assessments. Last year, along with hundreds of shareholders, both retail and institutional, market forces filed this same resolution at Westpac. That resolution received a vote in favour of 21.6%, representing over 1 in 5 of Westpac shareholders. 12 months have now elapsed, and Westpac has not taken meaningful steps to change its policy or framework on fossil fuel clients' transition plans. For the bank to ignore a significant portion of its shareholders' views over the past 12 months should be a serious point of concern for all investors. A failure to address the well-founded concerns of Westpac shareholders on its fossil fuel financing is a failure to manage the severe risks from climate change that our business faces. The reason for this resolution is simple. Dating back to at least July 2022, Westpac has clarified its expectations for upstream oil and gas customers to have a credible 1.5-degree aligned transition plan by October 2025. By October 2025, the bank will have given those customers almost 3.5 years to present clear and credible transition plans, and also given itself 3 years to drive improvements at those companies. Market Forces has repeatedly asked Westpac throughout the year whether it will continue to offer finance to companies that are not only not transitioning, but are expanding fossil fuels, and therefore, based on the latest available science, don't have a credible transition plan. We are yet to receive a clear answer to that question. This calls into question the purpose of this cornerstone climate policy. Westpac has given itself and its clients plenty of time to improve their transition plans, and past the October 2025 deadline, if Westpac is committed to the goals of the Paris Agreement, it should be withdrawing financial support to clients in the fossil fuel sector that aren't aligned with the Paris Agreement. For Westpac's existing fossil fuel customers, the reality is that many are doing everything they can to delay the transition by seeking to lock in fossil fuel expansion projects that will emit for decades to come. Take a recent example. One of Westpac's oil and gas clients is Santos. Santos is seeking to sanction 3 new oil and gas projects in the coming years. Westpac has continued to loan or arrange bonds for Santos, including a recent $1.24 billion syndicated loan where Westpac doubled its original contribution and extended the loan's life for 4.5 years. Based on Westpac's current policy, investors have no clarity as to whether it will continue financing companies like Santos and their oil and gas expansion strategy beyond next year. Last year, Westpac loaned or arranged over $750 million to companies expanding fossil fuels. That includes some of the largest companies with some of the largest gas expansion plans in the Asia Pacific, APA Group, JERA, and GE Vernova. The plans of these companies would delay the renewable transition and risk locking countries in emerging Asia, such as Bangladesh and Vietnam, into dependency on gas for future decades to come. If we're not ensuring our fossil fuel clients are Paris aligned and have a viable pathway to a sustainable business model, we risk financially enabling them to trigger catastrophic and irreversible climate collapse. The UN has stated that we are currently on track to warm by about 3.1 degrees, and it's worth dwelling on what a 3-degree global temperature increase would mean for Australia. As just one example, the Great Barrier Reef would be so devastated that it would not recover. We will see more extreme climate events like bushfires, floods, droughts, heat waves, and longer-term chronic issues like coastal erosion and sea level rise. Australians would be all too familiar with events like the Black Summer bushfires and the 2022 flooding events on the eastern seaboard, which will become more common and more severe if the world warms to the levels it's projected to. It's not clear why our bank continues to jump through hoops for a minuscule portion of customers that represent less than 1% of our overall lending portfolio. The expansion plans of these clients seriously jeopardise the stability and security of the other 99% of our customers. This weighting of support for irresponsible and reckless fossil fuel clients is certainly not in shareholders' best interests. With the evidence concretely pointing to what needs to be done, this resolution offers Westpac the chance to be a global leader on climate in the finance sector during this critical decade. The possibility is there. Westpac proudly claimed this year that it was the largest financer to renewables projects in Australia. But the transition is twofold. It involves a rapid and just transition to a net zero economy powered by renewables and clean energy, and a winding down of fossil fuel production in line with global climate goals. Westpac continues to undermine its positive actions by continuing to finance the problem, which is companies expanding fossil fuels. We strongly urge all shareholders to vote in favour of Resolution 6, not only for a better planet, but for a better future for our bank. Thank you.